Well, to some extent, yes. We did not change our base scenario for the world and also for Europe. We had a relatively weak development in the last 2 years, but we see an improvement in 2020, and that not very, very strong, but a slight improvement.
Do you think that one of the reasons why we saw a slowdown in the Swiss domestic economy was on back of the weakness in Eurozone economy last year?
Yes, indeed. Well, there were some special factors. For 2019, we had only 1% of growth, but we suffered a little bit from the weak demand for manufacturing products. This is a phenomenon that we see globally. So manufacturing, especially also the car industry, was hit in Germany hard, and we have many firms that supply parts into this industry.
How would you say the balance of risk is right now? Would you say it's tilted to the upside or to the downside, looking at all of the data?
Well, we believe that it's still tilted towards the downside. So we see more risk on the downside than on the upside.
Just to pick up on that, if indeed you do see more risk to the downside, surely another risk for you is that the ECB actually go ahead and cut interest rates or stimulate their economy again. That wouldn't help your exchange rate, would it? It would put some appreciation pressure yet again on the Swiss franc.
Well, the economic situation in the Eurozone is very important for us. So this is by far the most important export market. So we benefit from an improvement in the Eurozone. Of course, the interest rate differential is also important because it has an impact on the exchange rate. And the exchange rate, again, is a very important factor of monetary conditions in Switzerland.
Many people here are very skeptical about the efficiency of negative rates. Now, Swiss National Bank, you've had negative 75 for 5 years now. You seem to have the view that negative rates can still be effective at stimulating the economy. Why and how?
Yeah. Well, I think it's very important to make the distinction between the credit channel and the exchange rate channel. Of course, you can debate whether the credit channel is really effective with negative interest rates, but this channel is not that important for us. It's really the exchange rate channel. We have to maintain a certain interest rate differential with interest rates abroad, and for that it's a necessity to have negative rates in Switzerland as long as we have this international very low interest rate environment.
It seems to me then that you're looking over your left shoulder very closely, seeing what the ECB do to tie into that point of interest rate differentials. If they cut, then likely you will have to cut as well. If they don't do anything, then likely you'll have to stay put.
Well, we conduct an independent monetary policy, so we do not follow the ECB per se, but we have, of course, to take into account what is the international capital market environment, what is the international business cycle, and then we decide what is best for the Swiss economy and especially what is necessary to maintain price stability. So we have an autonomous, independent monetary policy, but we are a very open economy and we take into account what has an impact on Switzerland.
And you've recently tweaked your tiering as well, the minimum threshold at which banks have their excess reserve charged at the deposit rate. In your view, is that one reason for you to go even more into negative territory in the future?
Well, we know that negative rates have also side effects, and we would like to minimize these side effects. That was the reason why we changed the threshold, and that gives us both freedom to maintain the negative rates for longer, but also to cut rates if necessary.